Hello everyone and welcome to INFINOX Market Insights with me, Richard Perry, analysing markets for INFINOX on Friday the 18th of June. Now markets are still responding to the Federal Reserve meeting that we had on Wednesday. An incredible move has seen the dollar strengthen significantly in the wake of that decision that suggests that the Federal Reserve may well be now looking to raise interest rates twice in 2023. Now, the reaction has been seen across major markets. Asset classes such as bond yields have been moving higher. Also, the commodity prices have fallen sharply, and also equities have fallen off as this dollar has strengthened. And markets are still yet to settle down from this move. And I'm going to talk about a series of charts across asset classes today, which will try and pick the bones out of what has been going on. So with regards to the Federal Reserve meeting, well, they did have a significant shift seemingly to the hawkish side, and that has possibly now changed the game with regards to how markets are viewing the Federal Reserve monetary policy. So that's why the dollar has strengthened significantly. But is it a game-changing move? Is it a move that is going to continue is the question. The charts I will go through will hopefully try and paint a good picture of that. So with regards to data points we're looking at for today, there's nothing really on the docket. However, the Bank of Japan overnight held rates as expected and increased their extended their asset purchases by another 6 months. So it's going to be pretty much as is for the Bank of Japan. Now, at the end of this video, you've got the INFINOX support and resistance table for some trading levels. So the charts we're looking out for today are major charts. We're looking at euro dollar. The significant fall away on euro dollar has been significant for the outlook for the chart, and a key support level has been broken. We're going to check the technicals on that. Also, similarly on gold, the two charts on euro and gold do look quite similar. So let's have a look at how gold has also been impacted. And finally, with the S&P 500 futures, the key stock market for the global economy, and S&P 500 has been falling slightly since this Fed meeting, but we'll see how the technicals have been impacted. So let's have a look. So onto these MT5 charts now, and we can see on the platform that, wow, euro dollar had this run higher, and it was just slightly turning lower within this downtrend channel, but then accelerated lower following on from that Fed meeting, and it hasn't yet really stopped. And how the market responds, I've got on the longer term chart here, because we've got this reaction that we had back in February where the RSI got to 30, as you can see here on this sell-off in late February, early March, and then it rebounded as the RSI unwound, but then found resistance again and then went on another leg lower. So what we've got at the moment is the RSI down around the 30 mark, just below 30 actually. And the question is, how does the euro dollar now respond in this resistance band, this purple band of resistance between 1935 up towards 20 big figure is the question. So let's just zoom in slightly, and you can see that that resistance is old support, and this basically now a pivot band, a really good pivot band around 20 big figure. So that's key resistance now, and how the market reacts around there is going to be crucial. It doesn't really look as though it's stopped yet. It's slightly consolidating, you can argue, today. Stretched on the 4-hour chart under around 16 on RSI, but you can see already that resistance around 20 big figure. 20.05 was that reaction high yesterday afternoon, and it seems as though that will be a key resistance now for euro dollar. Now, looking at this gold chart, very similar move, run higher, just started to roll over and then accelerated lower, and now again has moved below the key level of a pivot band between 1798, 1815, and that is now the resistance point. Also, RSI coming back to 30, again similarly to what we saw back in the early March time. The gold chart didn't, or the gold price didn't sell off much after that rebound, but that is obviously going to be the crucial point. How does the gold react in this resistance now, 1798 up towards 1815, say around 18 big figure, $1,800 is crucial. So how this market reacts around this unwind is going to be crucial. There has been a pickup this morning. You can see that as the candlestick is actually fairly positive as the market has picked up from 1766, but already you can see the resistance having formed around that $1,800 area up towards 1825. Key resistances now lie overhead. So how does the market react to this move is the crucial question. And finally, S&P 500 futures off the top a little bit. We did S&P 500 the other day. It looks, I think, that this is a buying opportunity. It's come back into a nice area of support. I spoke about the old breakout around 4,200 up towards 4,230 odd, and it seems as though that reaction higher from 4180 yesterday, nice positive candle actually, reaction slightly higher today, but it was still in positive momentum configuration. Just zooming out a little bit, and you can see that we're still there. So I think ultimately this is probably going to be proving to be a buying opportunity, seeing as the S&P 500 seems to already have started to form support. Below 41.65, you look a bit dodgy, I think, because then you're testing that moving average 55-day, you're testing the uptrend channel. But for now, I think this is buying opportunity time, and seemingly as though that the bulls are getting back in the control again. Thank you for watching this video. I hope you found it informative for your trading. Join me again on Monday, where we'll be looking at how markets are set for the new trading week. So I'll leave you with the INFINOX support and resistance table, and I'll speak to you then. Thank you very much.